time. Hello, everyone. My name is Anastasia Riley, and I am a real estate agent. Today, I'm joined by Aaron Stratman to discuss how cost segregation studies can help short-term rental property owners significantly improve their cash flow. So, Aaron, thank you so much for joining us, and maybe take a minute and tell us more about yourself.
Yeah, thank you. I appreciate it. So I am based in Baton Rouge, Louisiana, and the company I work for is called Cost Segregation Services. And CSSI has been around for 20 years. We've done more than 30,000 cost segregation studies across the country, and work with a lot of real estate agents and clients and their CPAs across the country. And it's a tremendous benefit and probably more popular than ever. When I'm not helping people save on taxes, have 3 kids, twins, and a 5-year-old little girl. So busy with family, and I still cheer on my Indiana Hoosiers from afar. So.
That's awesome. Well, great. For those who don't know, Aaron, what is a cost segregation study and the benefits?
Sure. So cost segregation, it can kind of seem complicated, and there are a lot of components that go into a cost segregation study. But simply, people choose to do a cost segregation study because $1 today is worth more than $1 down the road. And so what a cost segregation study is, you have a 27.5-year property for apartments and residential, or 39-year for commercial buildings, so offices, self-storage facilities, medical, etc. Normally, you take that same amount of depreciation over that life that you own the building, so 27.5 or 39 years, and you take the same amount as a write-off every year. Cost segregation allows you to depreciate what's called the personal property, so 5-year, 7-year, or 15-year, and that includes a lot of things inside and outside that are non-structural. So kind of ballpark numbers, if you had $1 million building without the land, we might be able to come in and find between a big variance, but 15 to 35% of that could be utilized today as opposed to over time. So, if you could have, let's say, 20% of $1 million, an extra $200,000 to utilize in 2022 to offset your tax liability, that could be really significant for a lot of people.
Well, great. I mean, this sounds so interesting. So let's do an actual example. I know you have a lot of knowledge working with luxury cabin rentals in Broken Bow, Oklahoma. So let's use that as our main example, since probably our greatest audience.
Sure.
So let's say I have a $1 million cabin that I'm in the process of building. So my first question is, when should someone look at completing that cost segregation study?
So great question. So there are kind of 2 different ways to look at it. I'm engaged with clients right now who are knowing that they're going to put a building in service in the next few months, even into 2023, and they're going to get the process started today and engage us. And once the property is finished and they have renters, or it's up and running, we can come out and do a site survey. But we have other people who've owned a building for 5 years and they just found out about cost segregation. So it's not too late to engage us, then either. The best answer is, when you have a property and you put it in service, or you'll be in service soon, it's a good time to talk with us.
Okay, so basically there's not a wrong time to seek your services. So yet again, my example, let's say my cabin is about to be completed. So assuming the best case scenario, as you said, it's about what, 20% that I might be able to write off to offset my income liability, or like walk me through it. Like what would it look like for me in the financial sense?
Yeah, so every property is different. That's why I give that range. I try to be conservative upfront. So let's just say it's 20% that we find for you. So we would do the study for you. We would send somebody out to look at the building inside and out, or the property. And then we have construction engineers, and they put the study together, and it takes, a few weeks to get that done. And we break everything down for the CPA. So they'll use our report on the client's tax return. So, we might find that $200,000 for you that you could utilize to offset your taxable income. Does that answer the question?
Yes. So it will offset my taxable income, right? So my full income, or just income associated with that particular cabin?
So great question. So if you, there's the short-term rental loophole that a lot of people are talking about. And that's why so many people today are engaging in cost segregation studies, because if they qualify, which most people do, for the short-term rental loophole, they can take what would normally be passive income and offset it against their W-2 wages, which is huge. We still do a lot of cost segregation studies for folks who have passive income from properties, but if you can use it against your passive and your W-2, then it becomes really appealing.
And is that like a new loophole, or is it always been available, but people rarely utilize it? Or tell me more.
No, it's fairly new from the Biden administration. So when that bill was passed, I'm drawing a blank on the bill, but when that bill was passed earlier this year, it allowed people to qualify for this short-term rental loophole, and then apply that for their W-2s.
That is excellent. Actually, I did not know that. I assumed you can only offset that income you would generate from that, vacation rental.
Right.
All right. So good. Next question I have is, what happens to my depreciation going forward if I take that accelerated amount up front?
Sure. Yeah. So a lot of people are concerned or just curious about that, because if there are two things. So I'll kind of answer it in two parts. The first is your depreciation will go down a little bit going forward, because you have the accelerated amount up front you can use. However, it doesn't go down drastically. You're still taking the majority of the depreciation going forward, because let's say on that example, when we pull 20% forward, you still have 80% of that to depreciate. So, you get this big chunk today that maybe you can utilize to make improvements on your property, maybe make a down payment on a new property. And 39 years later, hopefully that $200,000 that increase in cash flow is going to grow to a lot more than what it would have if you took it over those little chunks over 39 years. And then secondly, sometimes people think in their minds that by doing a cost segregation study that it's creating more depreciation, and you can't create more depreciation. In the end, if you looked at it on a graph, it's the same amount. If you didn't do cost seg or did, it's just that whole time value of money thing.
Yeah, and I feel like at the beginning, especially at the beginning of the cycle, that having extra tax break is more meaningful too. So
Absolutely.
also, let's say I did my cost segregation study and took the maximum amount of advanced depreciation available, and then next year I decide to sell my cabin. Can this new owner do cost segregation as well? Or is there anything, I don't know, any tax? Do I owe anything because of it to the IRS, or how does it all work?
Sure, sure. So yes, if you sold the property, and no matter when, before the 39 years is up, you would pay recapture on some of the items. We always recommend holding the property for at least maybe 3 to 5 years, 3 years minimum, because you're going to be able to utilize that cash flow for at least a few years, and you have to factor in the fees that you pay to get the study done and everything. So the longer you hold the building, the less recapture you're going to have to pay back when you sell. A lot of people would do a 1031 exchange and continue to kick the can down the road, do another cost segregation study on that. But that's one factor. But the other question then you asked was, can the new owner do a cost segregation study? And yes, absolutely.
Okay, and I want to ask a question about approximate expense associated with the cost segregation study, but you probably won't tell me, right? I'm going to give me a generic answer. It all depends.
Yeah, well, it does vary drastically. So I'll answer it this way. So first, we always do a no cost analysis for our clients, and that'll show the estimated tax savings for them, and it'll also show our fixed fee to get the work done. Also, there are multiple different ways to do a cost segregation study per the IRS, and we do what's called the engineering based study that I mentioned, and that's considered the highest and the best. And you're going to get the most detail. Most of the time, you're going to get a larger amount of deductions that you can take. You're going to have, the construction engineers take a look at this, a site survey. And so with that, typically fees are going to be more than going somewhere online and going maybe to a company that does an appraisal based method, or they do, a study for $500 or something. And so those are, there's apples and oranges and ways to get it done. But yeah, it ranges from a couple thousand to, we do large commercial properties, which we're not really talking about that here, but those could be, in the tens of thousands of dollars if you're talking about $100 million, building.
But still sounds like, money well spent, right? Good to.
Yeah, it's a tax deduction as well. You can utilize when you file your taxes, the fees to get that done. So.
And what is the timing to engage with you and get that study done from start to finish?
So the best time to engage us?
Just as the time, and how long does it take to get it done?
Sure. It typically takes 4 to 6 weeks from start to finish. So collecting documents, doing the site survey. The longest part is when the engineers are looking at all of the documents that we receive from the client and the pictures and notes from the site survey. So that's probably the biggest amount of time. We always have, issues with some people who, engage initially and then they fall off the map for months on end and then wonder where their report is. And so it's always good to, we try to have continual, communication with the client or CPA so we can get it done in time. And to have a buffer so their CPA can review everything before they file.
And talking about CPAs, right? What you do is something that a traditional CPA is just not capable or licensed to provide, right? It's something that is unique.
Yeah. some CPAs will do it, or they'll attempt to do it. We call that the partial method. They may go and say, we're going to accelerate the parking lot, or the security system, something that is they can just pick out easily and identify, but they're missing the majority of what goes into a cost segregation study. They have to know so much about the tax law, so we don't fault them for not doing it. Of course, they typically will utilize like a third-party firm to do it. It's also good for separation for them and the client to have another firm do the cost segregation study. And then we defend our work at no additional cost in case there ever was an audit. So just something good for people to know.
Mm-hmm. And I, in preparation to this little video, I read something about the IRS audits and how doing that cost segregation study actually not eliminates, but lowers your odds of being audited. Is that true? Is that one of those urban myths that is happening?
Well, it's funny you say that, because a lot of it's a very common, I always get pretty much the same questions, and they're all good questions from clients. And normally people ask, does doing a cost segregation study, raise the red flag for an audit? Mm-hmm. And then, no, that's not the case. The IRS has cost segregation and accelerated depreciation as an acceptable method to utilize. So you're actually, what you're doing is putting everything from lighting, flooring, electrical, cabinetry, and then 15 years exterior, so hardscapes, landscape, signage, all of these things that we look at, you're actually putting them in their proper categories. Mm-hmm. So by just putting everything in the 39-year category, you're really hurting yourself, because you don't have the ability to utilize the 5 and 15 year with bonus depreciation today.
Mm-hmm. Well, I think that's all the questions I can personally think of. Anything that you would like to add? Anything I did not ask you that I should have?
No, that was a good, I think, overview, hopefully. I would just always encourage people who are curious just to contact us, give us a call or send me an email. It doesn't hurt to run the numbers. Mm-hmm. Better to know if it's a win-win. If you don't have any benefit, if you don't have any benefit, then if there is a benefit, then even better, right?
Of course.
And then you can make a business decision on what's best for you and engage with the CPA. So that's what I would encourage.
Well, thank you so much, Aaron, for your time. I think it was super informative, and thank you so much for everything.
Yeah, thank you, Anastasia.